Hello, folks, and welcome to the spring semester's first LIFT development webinar. Tonight, we have some alumni here, as well as the financial aid staff member to talk about student loan management. So at this point in time, I'm going to ask our panelists to introduce themselves. I'll kick it off. My name is Amy Archambault. My pronouns are she, her, hers. I am the Assistant Director and LGBTQI+ specialist in the Office of Multicultural Education. And I am going to kick it off first to Joe.
Thank you, Amy. My name is Joe Crandon. I'm a 1980 graduate of Holy Cross. That's right, that long ago. I was a first generation attendee at Holy Cross. I was the first in my entire family to ever go to school. And as my colleagues have heard this story and over again, my father was a cab driver in New York City. I'm Puerto Rican and Cuban. And he said to me, I can go to anywhere I want as long as someone else paid for it. So I really wanted to go to BC, got in, didn't get enough financial aid, but Holy Cross was very generous. And if you will, my life changed dramatically since then. But it's been quite a ride, and I'm happy to share what I know and perhaps what I might not know. Pass it over to Casey.
Thanks, Joe and Amy. My name is Casey. I'm a graduate of the class of 2013. I have a similar kind of story to what Joe was sharing, that my dad kind of always expected me to go to college. It never seemed like an option, but we couldn't afford it ourselves. So financial aid was really the deciding factor for me. Yeah, there's that.
Awesome, Nicole.
Thank you, Amy. Welcome, everyone. I am so grateful and happy to see so many faces here tonight. My name is Nicole Cunningham. I am the Director of Financial Aid at the College of the Holy Cross. I, too, is a first-generation college student. I was not able to attend Holy Cross, but the other institution that I went to was very generous with my financial aid offering as well, which really set the pace. And my interest actually in financial aid was a result of the kindness and the generosity that institution had provided, in specifically the financial aid office. So welcome.
Awesome. Thank you all so much for that. We're going to kick it off. We got a couple of questions here so folks can kind of popcorn in. And again, any students who are in this session, please feel free to throw it in the chat or unmute yourself and ask a question as it comes up for you as well. So the first question that we have for folks, can you talk a little bit about what student loans each of you had during your time at college, and what was that process in selecting which to go with?
Well, I'll start. So as noted, I got a financial aid package, which included academic scholarship, student loans, as well as work study. And then my parents had to kick in some money as well. Mine were all, if you will, government or state guaranteed that went through Holy Cross, all fairly low from an interest rate perspective for the time, competitive at the time. And obviously an obligation upon my graduation. And if I remember correctly, I had a hiatus of about 6 to 9 months until I was fully employed, until I could start paying them off. I didn't have or need to shop around because the loans were sufficient enough to cover my tuition at the time, which, embarrassing, by the way, Holy Cross at the time, the total amount was $5,500. Quite different from what it is today. But again, I think the earnings of most people were a little bit different as well, but the $5,500 seemed like a lot of money at the time.
In my experience at the college, I also was fortunate enough to receive federal and state loans and grants and all of that sort of stuff. But it was also contingent upon performing work study. And I also had to get some private loans. And that process was really tough for me because I came from a single parent household, and his credit score was not where he would like it to be. It was really tough for us to find a student loan who was willing to take on myself and my father as co-signers. So I actually ended up asking my grandmother to co-sign with me, which isn't something I was expecting to do, and it put pressure on me in a different sense. And shopping around, I had to make sure to find like the lowest interest rate possible. I probably applied for maybe like 5 or 6 different ones before I found an interest rate that I was happy with. And it came from somewhere super unexpected. I got it from Discover Student Loans. It was very close to the federal interest rate, which was really surprising and interesting. And I actually haven't heard of a lot of people utilizing them.
I can also speak to my experiences as well. I was very fortunate, as I mentioned, to have received a considerable amount of need-based grant for the institution that I attended, but also much like Casey, had received federal and state loans as part of my financial aid, and work study was a key component in order for me to continue to find resources to be able to sustain my personal expenses, because my parents were not in a position to be able to give me extra spending money, if you will, for laundry and all of those types of things. So that was really important. And I mean, the other part of it too is, while I still had to work to help pay for some of my tuition, it also opened up so many different opportunities on campus for me to get to know other people and to really grow as an individual. So I'm very fortunate to have had that opportunity.
Thank you all so much for sharing that. It leads right into the second question, and maybe, Nicole, this might be best for you, but there's a lot of language and jargon when it comes to financial aid and student loans. So I'm wondering if you can touch upon what are some of the different types of loans and things that students should know about them.
Yes, I think the term jargon is really an understatement in the area of financial aid. So I'm hoping that it can try to make things a little less, or a little bit, less complex than what people feel that it is. And so in terms of looking at the different types of loans, first and foremost, students really want to, in particular at Holy Cross, you want to evaluate your financial aid offer when you receive it from us, and look at whether you've received the subsidized Stafford loan and or the unsubsidized Stafford loan, or the other loan that we currently offer, which is the Holy Cross loan. And I'll try to go into a really high level explanation of those. The federal subsidized loan is need-based. The determination of that comes from the information that we get from your free application for federal student aid, or the FAFSA application. And it's based on the information that you and your family provide on that form. And then the output of that is what we use to determine if you're going to qualify for that subsidy. And basically what that means, albeit that it is a loan, it is one that does not accrue any interest while you are in school. And when you graduate, or if you happen to take a leave of absence for a semester or for a year, there's a 6-month grace period on that loan before you have to start making payments. So that's the subsidized loan. The unsubsidized Stafford loan is also offered through our assessment of your FAFSA application. And while the amount is relatively nominal, it's about $2,000 a year that students typically qualify for. The interest rates are low. However, the government does make you pay the interest on that while you're in school. So that's the main difference between the subsidized and the unsubsidized. One, the government takes care of the interest, and the other one, the government makes you responsible for the interest. With the unsubsidized loan, you can defer any interest that you accrue during your time at Holy Cross until after you graduate. But the one thing that I always recommend to students to do is pay close attention to what that interest is over your 4 years, because what happens is that interest will then get added to your principal when you start making payments, which is what we call capitalization. So you want to, if you can pay that off, so if you get a nice graduation gift from someone and you want to make a payment on your loan before you actually have to start repaying, we definitely would encourage you to do that too, because there is no prepayment penalty on those particular loans. The other loan that I mentioned that Holy Cross currently offers is the Holy Cross loan. That loan was put in place to replace the cancellation of the federal Perkins loan. So it was another federal program that the government had that they chose to no longer fund. And so we had to cease the program. But we needed to find a way to try to help students to receive some additional assistance in addition to what they're they were currently receiving as part of their financial aid offer. That interest rate is typically higher than what the Stafford loans are being offered at. They're about 6%. The good thing about it is there's no interest while you're in school, but when you take a leave of absence or you withdraw or you graduate, there's only a 3-month grace period window, and the loan does have to start getting paid back right away. If you come back to school, the way that the loan terms are written up is you're still responsible for making those payments because you already used up your grace period. My advice, and I know many of the individuals in my office will say to you, if any of the loans that you have as part of your financial aid you don't need to take and you can find another way to cover that expense, the one loan you first want to not consider is the Holy Cross loan. For that reason, the interest rate is higher and the repayment terms are not as good as the Stafford loan. Unfortunately, I don't have a say in how all of the decisions behind that loan came to be, but that is my personal recommendation. I know many of my staff will also agree to that. Beyond the federal loans, there are other options for students, which we call private loans or outside loans. We currently don't have a strong mechanism in place to be able to advise families and students on which is the best option for a multitude of reasons. There's some federal regulations behind what we need to do in order to establish a preferred lender list and so forth for those loans. But what I can share with you, is in terms of tips and what to think about, you really want to look at, what the interest rates are that are offered. You want to look at when you have to repay the loan, how long they allow you to repay the loan. Most of those loans do require someone who's credit worthy to serve as your co-borrower. So as an 18, 19, or 20-year-old, even 21-year-old student, they're not going to allow you to borrow just by yourself. You're going to need to have somebody else to borrow alongside of you. And one of the other features of many of those programs is after you've graduated and after you've made a certain number of payments, they will do what's a release of the co-signer or the co-borrower, which means that, let's say, for example, after 3 years of on-time payments, an agency may say to you, now we no longer need your mom or your dad to be a co-borrower. The loan is exclusively yours. So those are some of the things that you want to think about as well. What I will suggest, and often will say to students and to parents, 2 things. One, before you start thinking about those loan options, if you need to, you want to check your credit first. Many credit card companies will run a quick credit score for you so you can sort of see where you're at. If you're a Massachusetts resident, and I know that there might be some other states as well, but in particular, if you're a Massachusetts resident, you can obtain a copy of your credit report from each agency for free once per year, I believe. Maybe those restrictions have changed, but I'm not 100% certain of that. But with that said, it kind of gives you as a gauge as to where you fall or where your family may fall in terms of credit. So you always want to sort of kind of have that in the back of your mind, because generally your credit score will determine to the lender of the loan program where your interest rate is going to fall. That's one of the factors that they look at. So that's something to be mindful of. But the other thing that I would suggest is do your homework on the different programs that are out there first before you apply for any of the loans. Because when you submit continuous applications for a private loan to see what interest rate you're going to get, after a few attempts to do that and all of those inquiries, it's going to start to bring down your credit score. And so you may be in a position, or your family's in a position, to receive an interest rate at a certain level. But if you've applied for 3 or 4 loans all at the same time, it's possible that your tier of eligibility could change because you've applied for multiple loans. So that's another feature or another thing that I will always advise students of as well.
We can just end the recording there. That was amazing. Thank you so much for sharing that. That was really helpful. A couple of you all have shared a little bit about work study and scholarships. So I'm interested in regards to work study, scholarships, other financial support on and off campus. What are some ways that you each have used to help fund your education?
I did have work study, and like Nicole said, it was it means to an end in the beginning. I worked at Kimball, and then I realized that my hours were predicated upon how many hours I took. So I decided that if I could work more hours, I would, because then I'd make more money. And to the point Nicole made, again, being first generation, I had no idea when I got to Holy Cross that you had to pay for your own books. So when we got our syllabuses and they said, go buy the books, I was like, oh my God. So that's one way. And then in the summer, obviously, I didn't do intern back then. There was no such thing as internships, or I wasn't aware of them. But in the summer, I worked, and when I worked, I knew that I had to put a certain amount of money away to help with my parents' portion of the payments. And also, I knew that I also had to start to pay the loan back when I was looking at staring at graduation. So, and the other thing that I did too was I did do some investigation around scholarships that were available. I think I shared this with some of you before, but being of Latin American heritage, we didn't have computers back then. You couldn't go online. So I went to a library and did some investigation and found out that there was some local chapter of Hispanic leadership projects. And I applied for those loans, and I actually got a couple of $100 here and there, which helped. But again, it was just a fact of the matter that having talked to a number of people, they made me aware of these pockets of money that I could apply for. And again, not that it's easier for you, but I would imagine with the internet and Google available to you, that might be a little bit easier to do. Whereas I had to really go to the library and kind of hunt and peck and looking for it. But those are some of the ways I supplemented some of the financial aid.
So I'm really glad you mentioned that about how your work study is really predicated on how much you want to work. That was something I wasn't aware of when I first got my financial aid package, because I'm fairly certain on your aid package, it like just sets a standard of like $1,800 or something per semester or per year or whatever. But you're not really limited to that, and you're also not required to work that. So I thought that was really not clear, I guess I would say. I also started with dining services at Holy Cross, and I think that's where everyone starts to begin with. I didn't actually work at Kimball. I never did. I worked for Hogan. I started working in Crossroads for a 7 p.m. shift, which was like the worst one. And I was covered in greasy French fries by the end of the day. And then I picked up someone's late night Cool Bean shift, and it just kind of escalated from there. I worked at Cool Beans a lot. And then I was fortunate enough to apply for the Hogan Student Organizer position through dining services, which is like a leadership role, working in the office and scheduling students for their shifts and all that sort of thing. So that experience was really invaluable. Margaret is an amazing woman and supervisor, and I encourage anyone who has work study with dining services to reach out to her and get to know her. She's really amazing. Thank you, Michelle. And so on top of that, I also did work. This isn't really common of Holy Cross students, but I worked full time for the majority of my college experience, and I actually lived at home for my junior year, and then I had an apartment with friends during my senior year. Neither of those was through the college, of course, but that was the route that I took to save money and avoid having to take out those private student loans. Not something that I would really recommend. It didn't make for the most fun college experience, but I got through it. And as Nicole was mentioning as well, it's something that was super important to me was to pay interest on my student loans as I was going through school. I feel like that made a really big impact on me. Oh my God, I'm almost 4 years out of graduation now, and I've paid off 3 out of 6 of my student loans. I'm really proud of that, and I definitely don't think that it would have been possible if I hadn't been so financially aware. So that's part of the reason why I'm participating in this right now, because I know that not everyone has the resources to be aware of all of the different sorts of things that are financial aid.
And so, as I mentioned earlier on in our conversation this evening, I was the recipient of federal work study when I was a student many moons ago now. And in addition to working during the school year, I also worked a couple of summers at that particular school. But one of the conditions for that, which doesn't happen here at Holy Cross, but in order to receive work study and to work for a department in the summer, you also had to attend classes. And so there was the benefit to it was that they gave you free housing. But the flip side is that you had to take classes, and the classes were not covered by financial aid. There wasn't financial aid available in the summer. So I worked, 40 hours a week, used my work study money to then pay for my courses. And they were really generous in giving me a payment plan for the summer to be able to do it, because I couldn't come up with $3,000 right off the cuff to pay for that. So they were really good about that. And then I worked extra because I had a car, fortunately, at that point, to get me around. My parents pooled some money together and were able to get me a used car that kind of just got me where I needed to go. And so I took on babysitting jobs for some of the professors, just to try to make the extra money so that I'd have the money for the food and the occasional trip home, of course, because you don't want to stay. As much as I loved the school that I went to, I didn't want to be there 365 days a year. I wanted to be able to have a little bit of flexibility to come home to my family. So in that regard, I was really blessed to have that. And so work study came in certainly many, many, many forms. And one of the things that I don't think we've touched on at this point in too much depth, but one thing that I think is really important to mention, as Joe indicated, is looking for those outside scholarships. Yes, the World Wide Web, as I came to know it in my sophomore year of college, that's when this whole phenomenon took place. So that's definitely dating myself. It has really, evolved as much of our technology has evolved over the last 20, 25 years. And we have so many different opportunities as individuals to be able to share information about outside scholarships. And it's really important, I think, to find a little pocket of time, and I know as college students, it can be very taxing because the way in our mode of education right now is that you're on calls every day. You're on Zoom calls, you're in classroom, you're trying to study at the library. For those of you who are on campus, you're competing for some quiet time in your room with your roommate, et cetera, et cetera. But if you can find some small pockets of time to start doing research, or the other thing is reach out to our office. We can help direct you in many different ways on different opportunities. But my point really is if you can find some time to look for outside scholarships and you take the time to apply for them and you are successful at earning 1 or 2 or 3 or 10, that will then turn around and help to reduce the loans that you need to borrow to cover some of your expenses. We do have a very generous financial aid offering at Holy Cross for our students. At the same time, part of a financial aid offer will include some form of loan, whether it's Stafford loan, whether it's Holy Cross loan. In some cases, students and parents still have to take on some additional borrowing to pay for the student's cost. But by reaching out and looking for those outside scholarship opportunities, that will help to bring down your debt burden over the time that you're here as a student. Many students will say, well, I'm only able to find something, when I was graduating high school, and I can't find anything now. Please come and schedule an appointment with us. Again, right now we're not in the office, but it's done by Zoom, and we'll be able to try to direct you in some new opportunities because we are always hearing of different things. So I just wanted to share that as well.
If I can jump in just a quick second, I have a brother who's younger than I am, and he started late in terms of organizing his family. So he has a son that's going to college next year. And we've had this conversation. And one of the things that he discovered is that his town had scholarships for, people that lived in the town, obviously. And then there are also, sometimes companies have scholarships or monies for employees' children. And that's something you might think about. And the last thing I'll add, and I don't know, again, I'm not as current as I should be about Holy Cross, but I know that some of my classmates going into sophomore year decided that they were hard put to put ends together and decided to go into the ROTC program, which is another way. Again, it's a career path potentially, but it's another way to get financial aid and financial assistance. And then lastly, I also remembered that I too started at Kimball, but I ended up working the field house, no longer there. But I used to work at the field house. I eventually actually became, believe it or not, the assistant women's varsity basketball coach when it was a very nascent program. We had half a scholarship at the time. And then I was also an RA and an assistant head RA, which also came with some financial recompense to it too. So there are lots of ways to navigate, but I think the more important point is thinking about towns or cities that might have monies available and or employers that your parents, uncles, nephew, that your family work for. Sometimes they have monies available. And then again, like I said, the ROTC program.
Thank you all for sharing that. Joe, we got a new field house. It's called the Joe when you can get back on campus.
Is it really called the Joe?
Yeah.
Thank you. Thank you very much.
So yeah, the next two questions I have for you all, they kind of go hand in hand. So first is, how long do you all have to pay back your student loans, and what does deferment mean? And I'll go with that one first. So how long do folks have to pay back their student loans? And if anyone wants to touch upon, like, what does the word deferment mean? When we talk about jargon and lingo, to know, that can be one that trips people up as well.
Well, I know back in my day, when the world was black and white, it was a 10-year note. And you, as I said, you had a grace period of 6 months until you got fully employed. And then it was a 10-year note that you paid on, you got a coupon book and you paid monthly. If you had run into difficulty, you lost a job, or you had financial circumstances unforeseen, you could defer. And one of the things I would sort of share with the group is that anytime you enter into a financial arrangement with a financial company, you are entering into a relationship. They're giving you money based on your credit or the credit of those who have signed for you. And in turn, you've promised that you'll pay on time. And like any relationship, communications is the key. So if in fact you find yourself in a difficult position, don't duck, dodge, and weave. Pick up the phone, send an email and say, hey, listen, I'm having a little problem here. Can you help me? They're more than willing to help you. Where they get really skittish and where they get tough is where you don't return their phone calls. They start to send angry letters, and then they get creditors. And to the point that Nicole makes, all of these things could impact your credit score, which will not only be difficult for you later on, because then it'll be difficult getting a mortgage or other loans that you may want to get. So it's a relationship, and the financial institution wants their money back. And if they have to pick up a different arrangement, they're willing to do so, but they can only do that if you reach out and you open the lines of communication. And I think that's key. I think many of us, including myself, thought that these big banks, these big institutions don't want to hear from me, and I'll just hide and hopefully they'll forget about me, but they don't. So I would say open the lines of communication early, and I think they're more than willing to help you out, because they too don't want to put a loan in arrears because it impairs their balance sheet.
The topic of deferment is really relevant right now due to COVID. My student loans have been deferred for the past, I don't even know how long, to be fair with you, probably as long as the pandemic almost. And so that is really fortunate for me, because they're not accruing interest during this time period. And again, it comes down to, like, if you have the extra money to be continuing to pay them, that's great, because it's going to reduce your overall balance over time. Of course, you're going to have whatever term they assign to you when you take out your loan. But as Nicole mentioned earlier, there's no penalties for paying off earlier for most loans. And so if you can afford to keep doing it, it's a really, really good thing to do. And it'll only benefit you in the long run, even if you might have less money in your pocket now. That extra money in your pocket later could benefit you when you're trying to build a family or buy a home, or, whatever life situation is bringing you.
My work is done, because both Joe and Casey have really hit the nail on the head and answered a lot of what we talk about in terms of loan repayment and deferment and such. What I will share is not too much has changed, Joe, from your days of Holy Cross up until now in terms of standard repayment. Standard repayment on federal loans is 10 years, and it does start 6 months after a student ceases to be enrolled at the college. And so that, again, that can mean if you've taken a leave of absence, or if you withdraw from the college for a period of time. If it's more than 6 months, your loans are going to start to go into repayment. You're going to have to start making those payments again. But if you decide to come back to Holy Cross, and this does happen, students have to come and go for a variety of reasons. and you want to finish your degree with us, then those loans go back into this infinite term of deferment, which basically that means is that there's no interest, as Casey shared, that's going to accrue on the subsidized loans that you may have. So if you have an unsubsidized loan, there's unfortunately no way around that. There's interest that's going to accrue no matter what. But at least for any loan that you have that is subsidized, your payment expectation ceases and is held off until you complete your degree. One thing to keep in mind, though, for anyone who may take a leave of absence and then come back to the college, is that if you've used that 6-month grace period on the loans you've had already, you don't necessarily get another 6-month grace period when you graduate. So that portion of your loan will become due immediately. Any loan that you borrow from the time that you return to the college up until the time you graduate, that portion will have a 6-month grace period on it. So it's just something to keep in mind. And now, as both Joe and Casey alluded to, when times may be difficult for students and you're in a position where you may not have been able to secure a job after graduation, or you've been repaying on your loans for a couple of years and you may have found some challenges or difficulties in making payments for some unforeseen reason, it really is important to reach out to your loan servicer. So the loan servicer is the company that holds the loan, and the loan that, or the place that you're responsible for making the payments to. And it's really, really important to make sure that if you run into any difficulties or challenges, to reach out to them from the get-go. Don't put it off. Don't put your head in the sand. Don't say, I'll get to it, because before you know it, 1 month goes by, 2 months goes by, 3 months goes by, 6 months goes by, 9 months goes by, and then you're faced with being in a status of what we know as default. And being in default on a federal loan is one of the most trying and difficult things that an individual can really find themselves in a really bad predicament. And it does not allow you the opportunity, if you want to go on to graduate school, if you need to borrow loans again to complete those studies. You can't borrow if your loan is not, your federal loans or even your private loans are not in good standing. If you want to buy a car, if you want to buy a house, you need to sign a lease for a condo, you're applying for a new job and they're checking your credit. All of those things can be impacted negatively if you go into default on your loans, or that you're found to be in any kind of a delinquent status or in a bad standing with those loans. So it's really, really important if you find, again, that you're in some type of a situation where things are difficult, that you reach out to those servicers.
Thank you all so much for that. I got one more question before we kind of open up for students. And it kind of goes right off of that one, but can you talk about your relationships with budgeting and planning for repaying your student loan? So I know some people have some tips and tricks and how they navigate getting them paid off. So if anyone, I know we touched on it a little bit, but can talk about that.
For me personally, what I preferred to do was to pay off the smallest balances first. In my case, because I had the private loans, those ones tended to be the ones that had higher interest rates anyway. But I know that a lot of people will focus on things with higher interest rates first, even if those are the largest ones. That approach is probably more likely to save you the most amount of money over time. I'm someone who really needs to see like progress. So it helped to keep me motivated to be paying down those smaller ones. So as a result, I do have the larger ones open now, but when I get extra money, as rare as that is, I do throw it towards my student loans just because I want to see those gone as soon as possible.
I would say, and this is where I have 3 adult children who all obviously graduated from college and came out. And one of the things I often tell them is that when you're looking at budgeting, it's sort of like the question of how do you eat an elephant? Well, you do it one bite at a time. And the budgeting is a simple thing. You look at, there are 2, in my opinion, there are 2 types of expenses that you face. One are what I call fixed expenses that you can't change, defer, or do anything about. That happens to be your rent, your utilities, and in this case, your student loan. So that whatever you make, you have to think, okay, how much can I apportion to those fixed expenses, those things that I can't change? And then you have the other thing called discretionary expenses. And then this, again, for my kids, it was food. They like to eat out a lot. They like to do the Uber Eats a lot. They like to take Ubers. Those are expenses that can change, and you have a lot more fungibility around them. And those are the things, entertainment, going out. Well, obviously not in COVID land, but those are the things that you unfortunately, that's where all the fun is, but that's where you have more flexibility. So I think the watchword is, first and foremost, look at your income and think about how much of your income is going to cover those fixed expenses. And once those things are covered, and once you kind of have that on automatic, then you could start to look at your discretionary expenses. Now, there may not be a whole lot left there, but that's the key to being an adult, if you will. Again, I like to eat out a lot too, but if I did it every day, first of all, weigh 900 pounds. And then secondly, it would certainly eat into my budget fairly quickly. So again, it may seem simple, but think about your loan repayment as part of your fixed expenses. And that's a priority in terms of from the first dollars that come in on income.
Thanks, y'all. I know one gem that folks were sharing earlier was, say, one thing that I had done was when I went to graduate school, I was fortunate enough to get a graduate assistantship, and that was in housing. So my housing was covered. And one thing that I did was, though my loans were on deferment, if you have the ability to throw money at them, again, if you have the chance to do that, because it takes out the principal versus when it's accruing interest. So there's been so many awesome gems here tonight, but I want to open the door for folks. If they have any questions, feel free to either unmute your mic and share it aloud, or drop it in the chat as well. So I'll give a few moments there. I got a good question here. Is anyone able to speak a little bit about loan consolidation, what that is?
Sure, I can chat a little bit about that, because that was something that I did when I was taking some graduate courses and had a higher interest rate for undergrad and lower interest rate for grad, and sort of wanted just to have one payment. So basically with loan consolidation, what that does is it brings together all of the loans that you've borrowed. Typically in the past, students are not able to consolidate their federal loans and their private loans together, but I believe that since has changed. I'm not 100% up and up on those rules, but I'm not mistaken, I think that has changed, and there's some agencies that do that. So basically what they're doing is they're taking all the loans that you've borrowed. So let's just, for a simple talk, let's take all of your federal loans, and they put everything together so that way you have one set interest rate. They usually will round that to the nearest 1/8%, so that if, let's say, you have a Stafford loan that has a 6% interest rate, and you have two Stafford loans with an interest rate of 3%, they're going to combine those together. So they're going to recalculate your interest rate, so sort of the average of those. And then also they will reevaluate the amount of time that you have to pay back on those particular loans. So depending on how much you have borrowed will determine what the length of repayment changes or the outcome is. If it's a small amount that you're consolidating, you still probably will have the same standard 10-year repayment. But if you have a multitude of loans, then that repayment can be extended, usually sometimes for 15 years, sometimes for 20 years. One of the things I will share is that if you are the recipient of federal loans and your parents there's a federal loan for them, it's called the PLUS loan, you cannot consolidate those two loans together, because the parent loan is exclusively in the parent's name and the student loan is exclusively in the student's name. So you're not able to bring those two loans together to make one payment. Mom and dad are sort of on the hook for that one, and then you have your federal loans.
Awesome. We had another question come in, and I'm actually going to pair it with something else as well. Can we talk a little about income-based repayment plans? And this potentially will go hand in hand, but negotiating with the loan provider as well. They might be different, but anyone able to speak on that?
Well, I'm not going to talk about the income base, but I could talk about negotiating. And this probably goes for any types of negotiations. Typically, you're in a better position of leverage if in fact you either are or can intimate that the people you're talking to are in a competitive situation, i.e. you're talking to other lenders who are anxious to lend you money at favorable rates. If the lender you're talking to thinks that they're only game in town, you have no leverage. So while Nicole said, and I do agree, you shouldn't apply for lots of loans because it can impact your credit score, you can at least have open conversations that I'm thinking about the following. Hypothetically, what would you offer me, blah, blah, blah. And if you at least had 2 or 3 of those kinds of hypothetical conversations with lenders, and you have some semblance of what the rate environment looks like, that gives you a better negotiating position because now you have information and you can that's a big word. You can say that you're talking to other lenders. And because again, if you think about a bank and any financial institution, they are selling money. That's their product. So in essence, they want to make a sale and they want to make it on the most favorable term that they have, but they know they're in a competitive environment. And if you let them know that they are in competition, sometimes that gives them an incentive to offer you a better rate. There's an old thing about negotiating, he or she who speaks first loses. While you may have other rates at hand, I don't know that I would share them with them. I would just say, they have very competitive rates and yours seem to be attractive because if you offer them a rate or some talk around the rates, then that's going to anchor their conversation around that number. And they may come in a lot lower if you had not mentioned that number in the first place. So that's at least my thoughts around negotiations.
I can touch on the income-based repayment a little bit from my own experience. That usually means that your monthly payment is based on the income that you're bringing in, but at the end of the day, you still have to pay the same amount of the loan. So your payment is going to change. I believe it's every 2 years. At least that's what my experience was. It increased, but not by like too much. And I had received a raise at that point. And that's kind of the whole philosophy behind it, that, as time passes, your income is going to increase in an ideal world. And so when that rate change increases, like you're going to be just as able to handle it as you were your previous payment amount. I don't know if Nicole might have any more to share on that than I do.
You explained that very well, Casey. And the little bit that I do know myself, I'm not 100% familiar with all of the facets surrounding income-based repayment. But the one thing I would add is, if I'm not mistaken, I believe that they do extend the repayment of the loan. So it's not the standard 10-year. It typically does go out a little bit longer, simply because they are looking at where you are right now in terms of what you can afford to pay. And as you've indicated, over a couple of years' time, the expectation is that your earnings are going to continue to grow. So as your earnings grow, they're going to recalculate your payment, but they will usually extend that out past the 10 years. But doesn't mean you have to take more than that. If you're in a position where you're able to make extra payments as it gets further along in the process, by all means, you definitely want to do that.
We had another question come in. And so talking about a little bit between undergrad versus graduate school, what type of loans are there offered for graduate school? And is there a difference in handling your undergrad versus your graduate student loans?
In terms of what's available to students, there is a difference. For undergraduate studies, by the time you're a senior, your maximum federal loan eligibility generally is $7,500 and no more than that. As a graduate student, there are no subsidies on your federal loans. You're eligible to borrow up to $18,500 per academic year for graduate school. In addition to that, obviously, much like, when you're in your undergraduate program, if you have to look to other types of financing, which would be private loans and so forth, those are still available to graduate students. I don't think in all cases you have to have a co-borrower. Usually by that point, they will allow you to borrow on your own accord. But if you feel that you may receive a better interest rate with a co-borrower, sometimes that is a better way to go. They also have a program that is the Graduate Plus loan. So it's a loan just like the Parent Plus loan for undergraduate studies that is available to graduate students. But the main difference is is that mom or dad are not the borrowers. It's actually the student that's the borrower on that loan. So it works similarly to the student alternative loans, because there isn't a cap in terms of what you can qualify for. So it's up to your total cost of education minus any other financial aid you receive. So they would look first at the unsubsidized loan before certifying often how much you could receive in that particular loan. And it is based on credit as well.
Awesome, thank you. So we get about 5 minutes left, so I want to be cognizant of time. And so I'm going to close out with a final question. We've talked about a whole bunch tonight, and again, so much jargon and lingo out there. So I'm interested to hear, what is one thing that you want to leave students with about student loans and navigating that? So one gem that you say, if you can't understand this whole session, what do you want students to know about managing student loans?
I think the most important thing is that there's always help. It's something that I struggled with when I was a student. I didn't know the questions to ask. I didn't know who to ask for help. I didn't know where to go. It was just all so overwhelming that I just didn't ask questions at all. And that's really not going to serve you in any way, shape, or form. What I learned as I progressed through Holy Cross is that if the person I asked didn't have the answer for me, they would help me find someone who did. You don't have to dig yourself into a hole. There's always help for you. You just can't be afraid to ask for it.
Casey, I think that's right on. I think, especially within the Holy Cross community, I think people within the community, alum, are always happy to help. And you can find alum that work in the financial services industries that can answer those questions. And there is no such thing as a dumb question. I'll harken back to the other thing I mentioned, which is it's all about communications. You're in a relationship with a financial institution. It's always having that open and honest dialogue about where you are. And then also taking that relationship seriously in that, as I said before, they've extended you credit. It's your responsibility to pay it back when you can. And if you can't, then you open that conversation. I will also add one other thing, which we didn't talk about, and maybe it's not applicable, but I think it's worth talking about, which is the one thing I would not do is borrow money against any credit cards. Because the credit card rate, although they're willing to send you a big old check, it's usurious. The rates start at 14, 15. Some of them go up as much as 24%, and you can never get from under that. If unfortunately it's a legal business, if it weren't, they'd be loan sharks. But it isn't. I think that is the last, and it shouldn't be a resort you take at all. But I know that people have. So before you go to the credit route, you want to ask yourself 2 or 3 times about that first. And then if I can ask a quick question of Nicole. Nicole, I had read somewhere if you graduate, if you were to go to, and I'm going to use an example, let's say Teach for America, and you teach in poor neighborhoods, that sometimes there's loan forgiveness tied to that. Then also some very competitive employers, whether they be the consulting groups or ever, that recognize that some people graduate lots of student loan, and sometimes part of their offer package is to assume part of that student loan and or help you pay it back in a much more aggressive fashion. Is that true? Are those things true?
Yeah, so in terms of the Teach for America program, yes, that is a valid program. We have had a good number of Holy Cross students in my 16 plus years at the institution who have gone on to participate in those programs. And much like the Peace Corps, what will happen is, as a sort of a thank you for your service, part of the agreement is that they will give you the equivalent of a portion of an education award, which can be used to pay for future college expenses, or you can use those, as many of our students do, and even alums will do, and they'll use that to pay down some of the loan that they've borrowed. So those are opportunities for students. So a small portion of the loan can be forgiven. There is a whole gamut on student loan forgiveness that's out there. There's been a lot of challenges recently as well in terms of students qualifying for some of those programs. They are very specific in terms of your credentials and how you can qualify for them. Some of them do pertain to teaching in underserved areas. Some are also what they call public loan forgiveness or public student loan forgiveness programs. So if you are an attorney or an advocate or working in social services in underserved or underrepresented areas of the country for a specific period of time, you can apply to have a portion of your loans forgiven. Many times what will happen, so I've been told, is that by the time you've gone through that process and try to get the approval and so forth, for some there isn't much left to pay on, but still, something is better than nothing, right? They're not going to go back and look at your past history of what you've paid on your loans and give you a credit back for that. It's only what you have that's outstanding. And most certainly we can, for any student who's interested in learning more about those features, we certainly can put together some materials for you for sure. So it's a great question. I would say one of the things, and I think it's sort of a testament to who we are at Holy Cross and the culture of Holy Cross. When students are trying to understand the complexities of their loans that they have, or even their financial aid offering for that matter, or even trying to complete the application process, because that in and of itself can be very daunting and overwhelming. Please always feel that you can reach out to our office and have conversations with us. We're always available, maybe not right there on the spot if you happen to place a call or send an email, but we will make ourselves available to have a conversation with you to help you understand and help you navigate your way through the questions that you have, because our success is seeing that you are successful in your time at Holy Cross, and so that we want nothing more than that from you, and to see you walk across that stage is very rewarding. That's one of the things I think that really keeps me in the position that I'm in and wanting to work for an institution like Holy Cross, is because we have so much as a community to be able to offer. And as Casey put it very well, if you reach out to someone and they don't know the answer, they're certainly going to find somebody else to be able to help navigate your questions.
Well, I want to say a huge thank you to our panelists for coming out tonight, 7:00 at night, to talk about student loan management. So Nicole, Joe, Casey, again, thank you so much for helping out tonight and for always being willing to volunteer and help out our students here at Holy Cross. We have a fantastic community. So like many folks said, if you have questions, concerns, or just feel lost, reach out to any one of us here at Holy Cross, and we hope you all have a great night and stay safe.